Hello and welcome to Market Today. I'm Siddharth Zarabi, and with me is Mr. S.L. Jain, the Managing Director and CEO of Indian Bank. Healthy first quarter earnings led by lower provisions and controlled operating expenditure. Mr. Jain, welcome to the show. Take us through the highlights of the first quarter financial performance.
Yeah, so in the first quarter, our business has grown by 11%. And the business deposit has grown by 10%, and the CASA has grown by 6%, and term deposit by 12%. In the credit side, we have grown by 12%. Under the credit, the RAM, retail, agri, and SME has grown by 13%. So under RAM, retail has grown by 14%, agriculture by 18%, MSME by 6%, and corporate by 9%. Because of the business growth, there is a growth in NII, growth in operating profit, and growth in net profit. So the net profit has grown by 41%, operating profit has grown by 9%, and the NII has grown by 8%. Non-interest income too has grown by 11%. So because of the business growth, the profitability is coming. So profitability is coming from the core operations. And you see quarter on quarter, profitability is improving, resulting improvement in ROA, improvement in ROE.
Mr. Jain, you have highlighted the key metrics. How do you see the margin picture panning out in the remaining part of the year?
So margin picture at the beginning of the year, we said that our margin will be between 3.4 to 3.5. And we are stick to that guidance. Of course, in the first quarter, we are at a 3.5. 3 is against 3.52 of the last. Why we are saying the margin low? Because we see that the way the credit growth is happening and the deposit growth, we are having the challenges in the CASA growth in line with the total deposit growth. As a result, the additional funding will be done by raising the term deposit, which the interest rate is slightly higher. So NII can be higher, but the margins can be little bit down, and therefore we are telling that between 3.4 to 3.5. But our history said that we always perform better than the guidance.
You spoke about challenges on the CASA front. Take us through the details of what exactly is happening and how are you planning to mitigate the challenge that the overall sector is seeing as far as deposit growth is concerned?
So deposit, of course, we are growing 10%. CASA, what happens when the interest rates are high and the differential between the term deposit rate and the saving deposit rate is high, naturally people will move to the term deposit. Second, with a lot of digitizations where we have given mobile banking and internet banking, customer himself can transfer money from the saving deposit to term deposit. Third point is that when you see the money is going towards the mutual funds and through SIP or equity market, because the return is more there. Even the government securities return is better. So money is going to those, and therefore the system is finding challenges. And one more reason is that the credit growth is happening. We are in a high credit growth cycle. The credit growth of the industry itself is at 13%, 14%. So therefore this is a challenge. But as far as Indian Bank is concerned, we could maintain our CASA at 41% in June 24, which is 41% in June 23 also. And what we have done number of things. We have opened our resource acquisition center at 100 places. Government relationship sales, we have had a tie-up with the fintech, 135 companies we had a tie-up. So, and we came out with the various products. We have launched our new Ind Smart mobile banking app where number of features are given. So that way we are growing, and you see our growth is better. And in fact, our deposit and credit growth, you see year on year basis, in absolute terms, there are growth of deposit by 60,000 crore, and at the same time, growth in advance is 60,000 crore. So we are matching our deposit and credit growth. And of course, because of incremental CD ratio of 100%, LCR has little bit improved from 77% to 79%.
Mr. Jain, before the budget, banks had said that there should be some sort of tax related move in order to incentivize bank deposits, long-term bank deposits. It has not happened in the budget. Are you hopeful that something can be done in the future?
No, like that the government has increased the tax rates and the indexation, and indirectly this all will help virtually to the deposits as well.
Okay.
And second point is bank will also be offering better and better interest rates to fund the credit growth. So this is a process, sir. This is a process that we are passing through this process.
Okay. Since we are speaking about interest rates, what's your own sense about the macro interest rate environment and what is likely to happen as far as the repo rate is concerned? Globally, we are getting signals that a Fed rate cut is likely. So what is the larger interest rate environment likely to prevail in the coming quarters in India?
So globally, the interest rate may come down, but in a Fed and all, in the September or around that. In India, basically, you see the CPI inflation is above the comfort range of the RBI. So at present, we are not seeing that immediately there will be a rate cut. But maybe in a fourth quarter or by the end of the third quarter, we can see something. But as on date, since the CPI inflation is higher than the RBI comfort rate, we are not seeing.
Okay, end of third quarter or in the fourth quarter, that's a good point there. Let's talk about the overall slippages and stressed assets situation. Fresh slippages have increased to 1960 crore in the first quarter. What is the reason for this, and how has your overall recovery performance been?
Yes. So you see, our fresh slippage is 1928 crore and the recovery is 1937. Of course, you see last 2 years our recovery is more than our slippage. Of course, this time the gap between the recovery and slippage has come down. There are 2-3 reasons for this 1928 crore slippage. 900, close to 900 is coming from the MSME and the 600 crore from the agri book and 400 crore from the retail book. Again, sir, because of the first quarter, there was a heat waves, there was an election, right? Some seasonality is also involved. Out of this 1900 crore of slippage, we could recover 300 odd crore also till today. So we are recovering this money also. What happened to MSME? Even there is a delay in repayment or for any reason account slips, but it again get upgraded. The fact remains that our story for recovery more than the slippage will continue, sir.
What about the retail segment? Not just the numbers that you shared about retail, but how is the retail book performing, and what signs are your colleagues picking up from the ground with regard to demand?
No, you see, the retail we are growing 14%, and you see in retail our 70% is housing loan, which is growing 13%. And in fact, in the first quarter, the sanctions are 22% higher than the last quarter. Because in the retail, the repayment is also coming very, very fast. And in spite of that, we are growing. So we hope that the consumption story will continue and that the retail growth will happen. In auto loan also, we are having around a 55% of a growth.
So what is the overall picture for loan growth that you are projecting for the current financial year, and which segment you think will be the best growth driver?
So at the beginning of the year, we said that our credit growth will be in the range of 11 to 13%. And in the first quarter, we have grown by 12%. So within that, and we hope that the whole year it will be 11 to 13%. As far as the various segments are concerned, we said that we will be maintaining our RAM to around 62, 63%, 1% here and there. We could maintain the RAM to 62%, which was at 2-3 years back was around a 60%, 61, 62. So fact remains that our growth is happening in all segments, whether retail, auto loan, personal loan, jewel loan, agriculture, in all segments of the agriculture, MSME. So that kind of growth is happening, sir, and will continue to happen in the current year as well. And we would like to maintain our ratio of 62%, 63% in the RAM segment out of total book.
I want you to tell us about the housing loan segment. As far as housing is concerned, what is the average ticket size, and do you think that the current trend of escalation in housing prices is going to have an impact on overall market growth in the forthcoming quarters?
Yes, sir, housing loan are happening. You see the banks are giving housing loan at a very 8.5%, 9% interest rate. So interest rate is very, very reasonable. Second, the entire sector has become clean after the RERA and all. Earlier there was the issues in the housing and all. Now that issues are not there. and the income level of the citizens of the countries are increasing, right? And now double earning and all things happen. So there's a huge opportunities is happening in the housing sector, and we are seeing the growth there.
One final point, and this is to do with the MSME segment. MSME segment over the recent past has also been talking about payment issues and other such difficulties. From a growth perspective, what are you hearing from your MSME clients for the near future?
Here MSME also, because when the GDP itself is growing, so corporates are growing, MSME too is growing, so one growth is there. Now fact remains, the MSME is always having an issue of capital. They're always having the issue of not getting the money or a receivable from their customers. So of course in the act itself has provided that the money should come in time. Second, what happens in the last budget also, there are 3-4 things have happened for MSME. One is that the digital based assessment system. What happened? The access to the credit. If you have a digital system, naturally you can roll out those products from the corporate office and the access to the credit increase. We too have started. We are giving to our customer based on the GST return, based on the CMR score, or based on their income tax returns. We are offering with the new method also, the access to credit will increase. Second one is that in the Tharun, the limit has been increased from 10 lakhs to 20 lakhs. There also, those who have repaid to us, is a good opportunity for us to give loan. Even in budget SMA 1 and SMA 2, because of some reason there is a cash flow mismatch and SMA 1 and SMA 2 can happen. There also CGTMSE guarantees available. So good opportunities is also coming on the way to MSME funding.
Okay, Mr. Jain, I will leave it here. Thank you very much for sharing the details of your financial performance in the first quarter and taking us through some of the key highlights. Let's take a look at the script and see how it's been doing, because very clearly, as far as Indian Bank is concerned, a good set of numbers, and there you have the share right up there on your screen, up almost a percentage, 5.5 rupees, but strong first quarter performance, and that's the larger story from the overall banking pack. Stressed assets have been well managed by the Indian banking space. Growth continues. There are certain challenges on the deposit side because of a multiple set of factors, and that was made clear by SL Jain, the Managing Director of Indian Bank. We'll leave it here. We'll continue our programming on the markets today. Do stay with us. We slip into a very short break. Bye-bye.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus is on BKG Foods Q1 numbers. The company's reported a strong set of earnings in Q1 with a 40% uptick in its consolidated net profit that's now come at 58